Hello, this is Charting Man Dan of TheChartGuys, where we teach the little guy and girl how to utilize charts to manage their own trades and investments. What do I mean by the little guy and girl? Well, we just had two directives signed halting the implementation of a rule that requires financial advisors to act in the best interests of their client. Let that sink in a little bit. The big wigs on Wall Street can play with your retirement and hard-earned money without your best interests at heart. We currently have hundreds of members taking charge of their financial future, and we would love for you to come check out a free week with no credit card required to see if our services would be beneficial on your path to financial independence as well. What we offer, we have a separate course of over 5 hours in length on when to enter and exit positions. And in terms of what we do daily, we have nightly videos, key levels updated each morning before the bell, 2.5 hours of live daily webcam coverage in the morning and in the afternoon, and over 7 hours of educational videos. All of these links can be found in the description of this video. Come check us out. Thanks for watching. Let's get on to the technical analysis. Hey everyone, checking in on Apple, Facebook, and Microsoft, some of the tech sector here. I just did the market rundown and included the financial and tech sector over there, so if you want XLK, check out that other video. Checking in on Apple, we're starting to see a little bit of weakness. There's no dump by any means, and really the slightest bit of weakness at this point, the preceding action over the past 3 months, might magnify it and make us think that, it's a big deal, when in reality, the overall long-term chart, absolutely not a big deal at all. So we are pretty programmed in terms of expecting Apple and Facebook to just be these, invincible bulls, when in reality, they're not. So we're seeing some consolidation, and I'm watching the 143 level really close because we keep building a base of support here. 143.01, 05, 17, and now the low of Friday, 143.27. So we're seeing the bulls clearly hold that level as support. If we break it, this middle Bollinger Band is going to be in the low 142s to start this coming week. Keep in mind, by the way, that this week is a shortened week with only 4 days of trading, so options, expiration, and time decay will be affected by that. So this middle Bollinger Band has held for over 3 months, and we're going to use this as our guide. And if we lose this level, it means start paying attention, start being more cautious. Let's look to see how much consolidation is going to come. By no means do I expect to lose this middle Bollinger Band and then all out dump. It's just a gauge of strength, so to speak, where if it is lost, then we will look for the weekly chart to start to consolidate, because this weekly chart has not consolidated since December. And we've gone pretty much 108 to 145 with slim to no consolidation. So the weekly time frame formed a bearish reversal candlestick 2 weeks ago. I thought that was going to be the start of consolidation. We negated it last week. Now we have the same candlestick, a bearish reversal, inverted hammer, gravestone doji, and really you could, depending on the definition, is what that candlestick is. And either way, it's a bearish reversal candlestick. The exact definition, it would be an inverted hammer. So we're watching for a red week next week to confirm the bearish reversal candlestick and to start to see some normal, healthy consolidation. And as I keep saying, we could pull all the way back. We could pull back 10 cents in Apple, and this long-term chart would still be extremely bullish. So the main support that I would be watching would be this consolidation low of that very brief consolidation we saw, 137.05. So we're still watching exponential supports as well, because these exponential moving averages have been holding for the past 4 months. So if we get a red week, we will look at how we close next week relative to these exponential moving averages, and we'll be looking down to 137.05. So to sum it up, support 143, middle Bollinger Band daily, and then we'll be looking to 137.05, watching to see if we get confirmation for that bearish reversal candlestick. Facebook middle Bollinger Band has also held for over 3 months. Same thing, it's our gauge of strength. We closed just barely above it Friday. So on Monday, that level is going to be in the upper 140s. If we close below it, I'm looking down at 138.77 and then 137.60, where we had these brief little consolidations forming higher lows on the way up. Bearish reversal candlestick here as well. Watching for confirmation, same story. We have not confirmed a bearish reversal candlestick in 2017. We've been riding these exponential moving average supports in a very strong uptrend, and consolidation would be normal and healthy. And the major consolidation level in terms of maintaining higher lows on the weekly here is that 137.60 mark. And if we were to break that, we would look for more significant consolidation. But check out the full STO levels. And I use RSI a lot of the time, and very rarely do I see things that show me the full STO being more significant. But right now we're seeing the high of this RSI on the weekly time frame for Facebook. We topped out just over 70, and here we are pulling back from 70 right now. And the full STO is the highest level that it has been in quite some time. So we're consolidating and seeing some pullback. So again, these are just the starting signs of a heads up to the bulls, and maybe to start looking to some downside and some weakness in the tech sector in these big lead tech sector names. So looking at MSFT, I'm watching the exponential support here on the daily time frame, which we've been holding the last few weeks, continuing to see higher lows and higher highs. A lot of strength here in Microsoft, but we are close to a bearish MACD cross. So if we lose the low of Friday of 65.44, we will likely see the daily get that bearish MACD cross, and then I'll be looking down at 65.19 and 64.35. And I'm just looking at the higher lows on the way to the upside. We've seen tons of indecision candlesticks on this weekly time frame, but the bulls keep forming higher lows and higher highs. We have not confirmed bearish reversal candlesticks in quite some time, and these exponential weekly supports have been holding since September. So that is 7 months, like that's 6 months of holding those exponential supports. So if we lose those levels, it will be a heads up in the short term that consolidation is coming. Bearish reversal doji coming off of the all-time high this week and a red week this coming week, and a loss of these exponential moving averages would indicate further pullback is likely. This 8-period exponential, look, you can see how many times it has held, and that is going to be in the low $65 range to start this week. So same thing, this candlestick is a heads up to the bulls. No panic, no sky is falling scenario. Just need to be cautious. If you are a long-term bull, you're not worried about these consolidations in the slightest. And again, we could pull back 5 to 10% on some of these names and still be maintaining a very healthy long-term trend. So that's what we've got heading into this coming week. Keeping a watch for some bearish momentum to the downside as we are getting these first initial red flags to the bulls. And we will keep on top of it. We'll check back in on Monday and we'll see you then. Have a great weekend.